The Trade Desk company has been falling a lot lately, down 27% in the past month, but if we take a look at the 6-month chart, down 50%, and the stock is even down in the past 5 years, down 70%. So let's see if now is a good opportunity to buy the company. Now that the market cap is only $12 billion, they are generating $2.7 billion in revenue, which is up 20% year over year. Their net income is growing massively, up 42%, and analysts have them rated as a buy with 154% upside. They are trading at a forward PE of 13, which looks cheap, although we'll talk later about the valuation with a discounted cash flow model. I also wanted to make this video because a couple months ago when the stock was trading at around $37 per share, I made a video and someone asked me what price would you jump into, and I said around $25 per share, which is what it's trading now. By the way, someone commented, "Keep dreaming." Now this is just a lesson for all of you guys. Nobody knows in the short term or even in the long term exact price prediction. It is impossible to determine that. But now let's take a look at their fundamentals because they are truly amazing. They have seen amazing revenue growth in the past decade, growing from $113 million all the way to $2.7 billion currently. And as you can see, in the past couple of years, they have grown at double-digit revenue growth, which is insane. Their profit has also seen massive growth. Net income has grown from being negative 10 years ago to currently generating $438 million. And one thing that I like about this company is that they have even more free cash flow, currently sitting at $689 million. And because this is a software company, their margins are amazing. Gross margin is currently at 78%, profit margin at 15%, and free cash flow margin currently at 24%, although they've done in the past around 30%. And it is important to note that this is a software company. In fact, what they do is that they provide a platform for brands to buy ads, because software businesses in general haven't stopped falling in the past couple of months for no reason. Microsoft down 22% in the past 6 months, for example, Adobe down 43% in the past year, and Salesforce as well down 43% in the past year. But if we take a look at the financial forecast, analysts are still expecting tons of growth for the Trade Desk company regarding revenue. As you can see here, they are still expecting to grow at double-digit revenue growth for the next 5 years and go from $3.39 billion this year to $5.9 billion in 2030. And the same with profit, basically doubling down on profit from $2.08 to $4.25 per share. So although software companies in general are falling in price, analysts are still expecting tons of growth. And a great aspect about software companies is their balance sheet. As you can see here, the Trade Desk company has $1.45 billion in cash and only $375 million in debt, and all software companies in general have amazing balance sheets. By the way, if you want access to all the data I've shown in this video, you have my code to stockanalysis.com in the description. And now let's talk about the valuation, because now that the market cap is $12 billion and the company is currently trading at a forward PE of 13 and a price to free cash flow of 17 for the amount of growth, this looks very cheap. But in order to take a deeper look at the valuation, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $22 per share, middle $32 per share, and high $46 per share. And because the stock is currently trading now at $25 or $26 per share, it means that if my low assumptions occur, you would get a 7% annual return on your money, middle 14%, and high 21%. And these are great returns because keep in mind that the market usually gives you around the 10%. So for a bear case to give you 7%, it is indeed very good returns. And I actually think my assumptions were very conservative, as I have the company growing revenue between 7 and 13% annually for the next 7 years, averaging a profit margin and free cash flow margin between 20 and 26%, and I assigned a PM price to free cash flow at the end of the 7 years of 16, 18, and 20. But if you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. and this is valuable for every stock you want. And my view on this company has changed since I last made a video when it was trading a couple months ago around $37 per share, because I believe now the company is undervalued and worth starting a position. So guys, I want you to remember this: the same company at different prices is either a good or a bad investment. This is what being an investor or a value investor is all about. Now, I am currently not buying the Trade Desk company because I am currently doing more research on the company, and also because I own Adobe stock, and because Adobe has also been falling lately, I've been adding to my position, and this is another software business. I hope you found this video valuable. Let me know what you think about the Trade Desk company in the comments, and I'll see you in the next one.